Well, the Tax Cuts and Jobs Act has made estate planning much easier for most farm and ranch families. Much easier, that is, with respect to avoiding the federal estate tax. For 2018, the IRS projects that there will be slightly over 300 taxable estates. And joining us now is Roger McEowen. He's with the Washburn University School of Law. Roger, as always, thanks for providing some insight to us today. With that slim chance that the federal estate tax will apply, should estate planning be ignored? Does this lessen the need?
Yeah, well, you're right. The Tax Cuts and Jobs Act did significantly increase the exemption from the tax and also retain the income tax basis step-up rule, which means if we cause inclusion of property in a person's estate, it gets a basis equal to the fair market value of that property at the time of death. Those are two great pieces to have, and particularly the second piece, which is very important for just about every single farmer that's out there. But yes, that doesn't mean estate planning should be ignored. There are still things that should be done, and so there are some basic steps that everybody should still take.
What are the basic estate planning strategies for the year we're in, and of course looking forward?
Yeah, well, the current rules are in place through 2025, and so we currently have an $11.18 million exemption from federal estate tax per decedent. So for a married couple, that's $22.36 million. So most people are going to be beneath that 11.18 or $22.36 million threshold. And so the tax, that's why it's largely irrelevant. So the focus of estate planning for these persons should be on basic estate planning matters, income tax basis planning, using strategies to cause inclusion of the property in the taxable estate so that you can get the second piece of the puzzle, which is that basis step up that we talked about. So, looking for common errors, modifying outdated language in existing wills and trusts, for example, are just two basic steps that everybody should take a look at doing.
So, Roger, taking into account the changes that have taken place, is it necessary to have an existing will or trust redrafted?
Yeah, I think it is, because a lot of those old wills, sometimes they have what we call formula clause language in them, which ties the amount that passes to a surviving spouse in life estate form or an amount that passes to a surviving spouse outright in marital deduction form. They tie it to a number which was tied to the old exclusion number, which has now gone up substantially. So if you've got that type of language in an existing will or trust, you need to have that modified so it doesn't create what we call an imbalance in the second estate. You want to keep the estate plan as flexible as possible and not use numbers in a will or a trust that ties it to what's now an old exclusion amount.
All right. Well, Roger, as always, thank you very much for your insight. Again, talking with Roger McEowen. He's with the Washburn University School of Law, joining us on the phone today from Topeka, Kansas.